Bitcoin is going to $1 million in the next 8 to 12 years. It's not a matter of if, it's a matter of when.
Tell me about this 4-year cycle. Tell me about the 4 seasons of Bitcoin.
Basically, Satoshi in the white paper said that as long as more people are buying Bitcoin every 4-year cycle than the cycle before, and that exceeds the amount of new Bitcoin that's issued, the price has to go up. And my corollary on that is yes, but not in a straight line. Every cycle has had fear and greed intra-cycles that basically have been very consistent. This is what forms the seasons within each cycle. So we should be looking at the bubble popping sometime in like October, November of this year.
What is a super cycle?
The super cycle just means that the highs get higher. So the normal expectation is we could go to 200 to maybe 250,000. If there's more demand than that, and at 250 the bubble doesn't pop, but it keeps going, we could easily go to 300, 350, 400, maybe even short of 500,000.
Michael, let me get your final thoughts and then also tell us about your new book, Bitcoin Supercycle.
It's not Bitcoin for dummies, it's Bitcoin for uneducated investors, and also shows when to invest in Bitcoin to maximize your return and basically selling or hedging some at the top and buying more at the bottom. You have missed out by saying no for the last decade. I'm here to say it's not too late. That's a big part of what the book is about.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... Hi, it's Brian Rose from London Real. You probably know that we've just recently been re-platformed on YouTube after 25 months completely in the dark. The truth is, I really need your help. What I really need you to do is click on that subscribe button right now, like this video, and maybe even leave a comment or share the link with friends. We're really fighting against an algorithm that's tried to keep us quiet for so long. And the more subscribers we have, the more people watch our content, the better guests we can bring you, the better content, and we can continue transforming lives. We've been doing this for 14 years now. I want to do this for another 14 years, but I really need your help. So click on that subscribe button, like the video, leave a comment, share this, and we're going to continue to bring you more and more great content. Thank you. This is London Real. I am Brian Rose. My guest today is Michael Terpin, the crypto pioneer, investor, author, and founder of Transform Ventures and BitAngels. You are called the Godfather of Crypto, and you have advised and invested in hundreds of early-stage blockchain projects, including Ethereum, Tether, Augur, and Shiba Inu, and helped launch some of the industry's most influential ventures. You founded the world's first angel network for digital currency startups, built a multi-city crypto investment ecosystem, and helped kickstart Puerto Rico's blockchain movement. Your new book, Bitcoin Supercycle, How the Crypto Calendar Can Make You Rich, outlines a powerful 4-season framework for understanding Bitcoin's long-term price cycles and why you believe this bull run could take Bitcoin beyond $200,000. You've said this is not about hype. It's about the timing, the waves of innovation. Michael, welcome to London Real.
Very happy to be here, Brian.
Amazing to have you here. I can't wait to dive into this. In the past year alone, we've seen so many new Bitcoin investors. We've seen corporations, institutions, governments, but I believe that most of them are unaware of the concept of the Bitcoin cycle, let alone the super cycle that you describe. How do you start to explain this to kind of the newcomer to this space?
Well, in my book, I spend the first 5 chapters just saying why Bitcoin has been the best investment in history, which is, unquestionable. I mean, you went from a tenth of a penny to over $100,000. And, why that was really built into the white paper. I have an entire chapter where I reprint the white paper and then annotate it and I explain it. Many people who sort of looked at the white paper, if they even did, a lot of people just simply discounted Bitcoin out of hand. Oh, it's a Ponzi scheme, oh, it's this, and they never read the white paper. It's hard to discount something you've never actually experienced or even read or even investigated at all. But in the white paper, the beginning of it and the end of it are the most important parts. In the middle, you have some formulas that are there to impress other cryptographers about why this is going to work. And some people look at it and say, oh man, this is like, I can't understand this. But really, you can ignore the middle part. I mean, it basically is just proof that what he's saying about, how the one block is going to then get sealed and the other one you have to go and undo all the proof of work beforehand. It's just like, about a third of the paper is just sort of, putting mathematical formulas to prove it to other cryptographers. But really, the first couple of paragraphs that talks about how to create a peer-to-peer form of money, really of value overall, and then summarizing at the end why this is going to work. I mean, that was revolutionary. Satoshi didn't vet all of the parts. He stood on the shoulders of giants and he credited a number of them in the white paper. The people who invented public key and private key cryptography pairs and hashing, et cetera, et cetera. And my friend David Chaum, who invented the word cryptocurrency in the early 80s after getting his PhD in Berkeley, basically had come up with something called eCash that had about 90% of what Bitcoin had, but it did not have the decentralization. He built it with IBM. And when IBM decided it wasn't for them anymore, it collapsed. And so really the decentralization part that came from the mining algorithms and the way that it basically cannot be stopped by anybody at a certain point, as long as you have internet in the world, was the point that if you understood this and you read the white paper and you bought in the early days, you're now one of the richest people in the world.
Are you surprised when you look at the news in 2025 that you've got the BlackRocks and the JP Morgans talking about it? You've got the US with potentially a strategic reserve. You've got other countries now confirming they're amassing it. Just sometimes you have to pinch yourself, or did you really think this would happen by now?
I wasn't sure which way it was going to go, but this is logical because, a lot of times you'll have the incumbents, they have the innovator's dilemma. Yeah. I'm sure, and from what I've heard, I've been told that, JP Morgan knew what was going on from early on. They're like, oh, this is a threat to our credit card business, but it is something that could save us money in terms of getting away from the SWIFT system. What do? Why don't we go and say it's a scam and then backpedal and say, hey, why don't you just only approve banks to do this, right? And that's kind of where it was for a while. I mean, you had the first ETF proposal in 2013 by the Winklevoss brothers. Had that been allowed, you would have had the average American who's now allowed to go and buy in with their Charles Schwab account at $110,000. They could have bought it at $110.
Yeah. Wow.
And so we lost that opportunity to create great wealth for the middle class, which is, quite frankly, never where the interests of the most governments have been. It's been with the interests of the wealthy, the powerful, the entrenched.
And this is typically what happens when you're trying to unseat someone who dominates that market is they'll use all sorts of tactics. So they'll try to defame it. Then they'll try to over-regulate it. We see this in AI a little bit too with some
regulatory capture.
Right. And then at some point, I guess they're capitulating at this point.
Yes. I mean, the old saying that was, attributed, although I've never seen anybody actually show the day that it was said, to Gandhi, which is, first they ignore you, then they laugh at you. I'm missing one of them. First they ignore you, then they laugh at you. Oh yeah, then they fight you, and then you win.
Yeah, yeah.
And we're not quite at the fighting stage yet.
Okay.
I think that we're kind of moving from the, no, actually, I suppose you could argue that we're sort of moving between the fighting and you win, or you could say laugh at you and you fight, and we haven't had the final battle yet. There's little things that people ignore. For example, everybody's celebrating the Stablecoin Act, right? And they're celebrating the ETF. Well, the ETF had one little provision before they would pass it, which was it has to be settled in dollars, not in Bitcoin, right? And so that means, first of all, that you can't sort of move Bitcoin in and out of it. You have to go and cash settle it and then pay taxes on it. And the other thing is that in the Genius Act, Libra under, the Democrats got laughed out of Congress, and they were like, no, we're not going to let someone bad, Facebook, go and control a currency and do payments, bad. Now all of a sudden they're talking about doing a new version of it, right? But they have to partner with the bank, because that's what the new stablecoin acts say, that you cannot go and issue a stablecoin if you're a tech company, if you're a big tech company. You have to partner with a bank.
Okay.
And so that means that at the end of the day, it's, back to the incumbents. They will have control, or at least they will have a certain portion of control. But I think they'll still, go in, and there'll be an app. I mean, look, Apple's certainly partnered with banks already in Apple Pay. So this way, though, that I see in the future that you're going to have, the mass adoption is going to come with stablecoins. We're already up 800%. Once you have a wallet for a stablecoin sitting in your iPhone, it's not that hard then to say, oh, do you want some Bitcoin as well?
Yeah.
Do you want some Dogecoin, right? So,
Yeah.
But it's going to start with, right now, I can go anywhere in the world and be in a restaurant, and they bring me the bill on an iPad. I double click on my iPhone. It's linked to my, JP Morgan Chase credit card, and it pays. Well, all they have to do is once show grandma how to go and upload, a few $1,000s in stable coins, or perhaps have their bank go, do you want to transfer this into stable coins? Arthur Hayes actually did a very, insightful blog post this week, where he effectively said that, he's long on Bitcoin and long on the big banks. And the reason why he's long on the big banks is he said that by them adopting stablecoins, and they will issue their own stablecoins, and JPMD is already a thing in the planning. And so once you have JP Morgan issue their own stablecoins and compete against Tether, they'll be regulated out in certain places. Tether is no longer legal, I guess, in the EU, whereas JP Morgan's going to have no problem, and Deutsche Bank will do theirs, et cetera, et cetera. They're able to go and mint their own dollars, right? So they can go and create a big treasury, 20 to 1. And B, the easiest onboarding is they'll say, oh, this money you have sitting there in, 0.03% interest, move it over to stable coins, and we will give you a bonus. And when it's allowed by law, we'll give you interest. They'll go and DeFi, stake it, get 10%, and give you 3%, and you'll be happy for it.
Yeah.
And I see that as the future. And Arthur had pointed out something that I hadn't thought about, which is once you encourage everybody to move their cash deposits that they just see as like something on their computer screen, into stablecoins, which they also see as something on their computer screen, all of a sudden, all you have to do is KYC that account once. And if it's being kept by the bank, they already know what it is. And now all of a sudden, you're sending to other addresses that are also KYC'd automatically. Your compliance costs go from $20 billion a year, as Arthur had pointed out, to near zero. And that savings alone can double the price of the big banks.
Wow. And that dumps massive liquidity into the crypto ecosystem. And we've been waiting for that instrument that would onboard the non-crypto liquidity. People always joke that, crypto is just a small group of players moving their money between each other. But this will take grandma's amount in the savings account and all this money that really sits there fairly idle, and all of a sudden pump it into liquidity.
I sort of see this moment as similar to 1995 with the internet. I remember there was an article in 1995, maybe it was a little bit later even, but it was laughing at Amazon. It's basically said this whole concept of e-commerce is a joke, and the internet is a joke.
Amazon.bomb.
Well, they basically, this was before it went up and collapsed. It was basically saying that, the entire sales of Amazon are less than an average shopping mall in Pittsburgh, right? And so how are they going to become a dominant player? Well, at internet adoption back in 95, there's only 2 million people on the internet. And now there's like 5 billion or something. and add a little bit of time and brilliant execution and market dominance, and now they're bigger than anybody. And so I think that the same thing happens with I haven't heard people use the honey badger meme in a while, but Bitcoin is the honey badger of money. It just keeps on eating up everything in front of it. And Michael Saylor, of course, who didn't even get into Bitcoin until the end of 2020, has now become its biggest public advocate. And he's sort of shown with the performance of MicroStrategy that going long and somewhat leveraged on Bitcoin has outperformed NVIDIA, which is phenomenal. And I think it's a good example of the power of getting into Bitcoin, even when it was too late by many people in 2020. And I'm here to say it's not too late, and that's a big part of what the book is about.
Yeah, well, let's hit that point right away, and then I'd love to get into the seasons and talk about the cycle. But you tell people it's not too late now, but a lot of people look at it 100,000 and they feel like it's too late. So how do you explain to people?
I thought it was too late when I got it at 100 because I had been offered it initially at $4 a year ago, and I didn't do enough research. It's a year ago, meaning not last year, but 2012 versus 2013. But I finally got it and, did my deep dive in early 2013. That's when I went all in. And my first friends in the industry were people who got in like 2011, 2012. And I was like, oh man, most of my friends got in like under $1. I mean, I'm way too late at $100, and now it's 100,000, right? And so if it depends on your time perspective and what you're comparing it to. If it's only going from 100,000 to 1 million in the next 8 to 12 years, how does that compare? It doesn't compare well between what you could have done in the last 10 years, but that's time gone. That's past, right? Yeah. You have to look at what's going forward. I don't think that during the time that it's going to take for Bitcoin to go from 100,000 to 1 million, 10x, that gold is more likely to go to 35,000 an ounce, or that the NASDAQ is more likely to 10x.
Right. So it's still an incredible investment. And if you talk to Michael Saylor, he's calling for $13 million Bitcoin. I think it's by maybe same time frame, 10
Well,
years,
no, it's 21 years.
21 years.
He basically has a very cute narrative, which is a little too cute for my taking. It's 21% over the next 21 years.
Okay.
And it's a little bit in this 21 million Bitcoin. And there's no rationale for it being 21% other than, hey, it's been 60% over the last 10 years or whatever. And it was even bigger than that if you looked back to when it was a penny or whatever. It was a ridiculous multiple. And even the last few years, it's been like 30, 40%. So, it's not impossible to be 20%, but I think that's high. I think that it'll certainly be that for the next, let's see, how many 20% years do you need to get to 1 million, to 10x it? So I think it could be 20% for like the next 8 to 12 years to get to 1 million. But then after that, I don't see it. I mean, you do have this fact of diminishing returns as the market gets larger. The Bitcoin Supercycle is based on the fact that there will be a period of time, which I think will be about 2 to 3 cycles, where you temporarily reverse the diminishing returns because of the S-curve of adoption. Okay. Every technology has had an S-curve of adoption. And when the internet took from 1969 until, let's see, when did it start going parabolic? Maybe in the late 90s. So it took almost 30 years to be able to get from like 0% user base to like 7-8%. And then all of a sudden, now you've got, 70% of the world has got some form of internet. Mobile phones, it's technically over 100% because a number of people have multiple phones. Right. But there's very few people in the world without a phone. And the vast majority have the internet. And, 25, 30 years ago, they did not. And so what happened during that time was a lot of companies who were providing infrastructure got rich. Microsoft, Cisco, et cetera. Who's going to get rich when the price of Bitcoin goes up 10x and there's no more Bitcoin left practically? The statistic that people need to understand is we are 95% out of Bitcoin. Now, there's 95% has been mined out of the whole 140-something year period because it started with 10 million in the first 4 years and then 5 million in the next 4 years. So literally by the first 12 years, we were 17.5 million mined. Now we're at almost 20 million mined. And yet we're only at 5% of the world that has any Bitcoin, and only 1 million people have a whole Bitcoin.
Okay. Right.
Yet, if you figure that we're ultimately going to go to, let's be conservative and say 50% adoption in the next 20 years, that's a 10x increase in the amount of Bitcoin needed. Where's it coming from? has to come from price appreciation.
Right. And that S curve just, you see almost little adoption for a while, and then it just starts going up, and there's massive amounts, and then it tapers off.
My favorite picture to identify this was about cars, right? Automobiles between 1903 and 1913 went through that kind of adoption curve. And there's a picture 10 years apart of New York City, Times Square, and I think it was 1903, with all horses in one experimental car. And then 10 years later, in 1913, it was all cars.
And maybe one horse, or maybe
not.
one
horse, yeah.
Yeah, I think London went through that same transformation. This city used to have 15-to-1 horses to people, and you still see a lot of traces of it if you open your eyes. It was like a major catastrophe, having all that horses and all that waste and all of that stuff. People forget how quickly. So same S-curve applies here, and we're just at the very beginning. We're down here at this 5%.
Yep.
Right. Okay.
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside, I view, is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
Talk to me about these seasons. Michael, I remember in 2021, we had just gone kind of full-time into this space, and we were watching Bitcoin go up and up and up. It hit 69,000, I think, at our 10-year anniversary in October 21, and everyone thought it was going to 100K by the end of the year, and we saw it top out there, and then obviously go down to 16 the following year.
Correct.
And I guess I've been through like one full cycle. We're here almost 4 years later, not completely. Tell me about this 4-year cycle. Tell me about the 4 seasons of Bitcoin.
So I started investigating Bitcoin during the pre-halving cycle, 2012, and then I started buying in the very start of the first halving, after the first halving in early 2013. And so you really couldn't tell there were cycles until probably after the second halving and things started to repeat. Because the pre-halving cycle, even though it did have, the first year there were no Bitcoin sold, right? 2009, there were just people mining and not knowing what to do with it. And then the very first sale of Bitcoin was by Satoshi's intern, Marty Belki. He was a Finnish college student who basically read the white paper. Anybody with internet and know where to look could have found the white paper. He said, hey, I like what you're doing. I'm a college kid. I'm 19 years old. Can I help you build a website? And he's like, yes, you can. And I also have a chat thing called Bitcoin Talk you can help me with. But more than anything, can you go and start mining? Because I want to make sure there's at least 2 of us mining at all times. And so that's how early it was, right? Wow. And so he accumulated 55,000 Bitcoin.
Okay.
And he sold 5,000 of them for $5 on PayPal.
Wow.
That was the very first sale of Bitcoin.
That's that 1/10 of a penny you refer to.
1/10 of a penny, yes.
Wow.
And it was a single sale, and somebody else tried to sell for a little bit more later, and they didn't get any bids. So, I mean, it was still very early. And then, of course, the famed pizza that was Laszlo Heinich, who was the first person. I mentioned all these things in the book under the historical aspects before I get into these things with the seasons. And he had over 100,000 Bitcoin. And the reason he did was because he was the first person to figure out how to go and get more Bitcoin or get it faster and more assuredly by using GPUs instead of CPUs.
Okay.
And he was a gamer. He was a 19-year-old gamer. And so when he had, when he spent the 10,000 on pizza, he had like 100,000.
Okay.
And allegedly now he has 0.
Okay.
Because he ended up buying a few more pizzas, and then he ended up buying a computer with his remaining Bitcoin when it hit the crazy price of $1.
Pizza Day is 2011. Is that when he?
2010.
10 when he did that. And the one before, the $5 on PayPal, was 09.
That was also 2010.
Also 10 as well.
Yeah,
okay.
29. Nothing happened other than about 2 million Bitcoin being mined.
Okay. Wow.
By less than 100 people.
Okay. And the pizza price was what per Bitcoin?
About 2.5 cents.
Okay. All right. Interesting. All right. So those were 2 pretty notable.
Well, there's three holidays I like to say in Bitcoin. There's October 31st, which is the day the white paper was written in 2008. There's January 3rd, arguably the most important date, because that's when you actually build something, because there's a lot of papers out there that never got built. Right. And he did build it because he was encouraged to build it. And Genesis block, January 3rd of 2009. And then Bitcoin Pizza Day, which is March 22nd, I think it is.
Okay, 2010, right.
2010, yes.
Okay, so those were the early days. Then we start seeing something that you might call a season start to come
Yes,
into place.
so basically Satoshi in the white paper said that, his whole halving structure was to distribute Bitcoin fairly. And it's the earliest people got the best rewards because they took the most chance, right? Because they had to turn on a computer and spend electricity, even though it was very minimal amounts, with the belief that someday this would be worth something. And so they had I compare it to like, being early at like, Mary Kay or Amway is, the top of the pyramid. Naval Ravikant actually here in London at a conference, I spoke at in 2015, said that Bitcoin was the most brilliant pyramid scheme. He got booed. He said, no, not Ponzi, pyramid. The people who get in early do the best. And that's absolutely true. Right. And without that, you might not have had adoption. If you had nobody mining, then the project dies.
Right.
And so you got people to read the white paper, believe what he said. And what he said in there turned out to be true. And he was like, as long as more people are buying Bitcoin every 4-year cycle than the cycle before, and that exceeds the amount of new Bitcoin that's issued, the price has to go up. And my corollary on that is yes, but not in a straight line. So if you look at the halving price, which so far has been the closest to fair market price every cycle, if you look in the rear view mirror and you look and you see when are things clearly overvalued because it then crashes afterwards, and when are things clearly undervalued, this is what forms the seasons within each cycle. So every 4-year cycle, which to date has actually been closer to 46 months, it's actually based on 210,000 blocks.
Okay.
And with perfect timing, about 10 minutes per block, it should be 48 months, but we've had slightly quicker blocks. And so that's meant that it's 46. The main reason why it was 46 was because for the 2016 halving, it got sped up quite a bit because of the Chinese mining ban, and you had a lot of disruption in the mining space. And so you had to kind of speed it up to make up for not as many people mining and the hash rate and just some technical things. But for the most part, the algorithm is built in forever to keep through, roughly 2140 to basically equalize that if there's more people mining, the difficulty goes up higher. And if there's fewer people, it goes lower, and they readjust the difficulty every 2 weeks. 2 weeks used to be a long time because I remember when, like, after a halving, it might have gone down 20% in just one halving. And if you had a machine that was like, you were killing it, you were getting a lot of the blocks. Now, this time, because the difficulty took a year and a half to go from level 1 to level 2. And that happened roughly around the same time as Laszlo started GPU mining. And that was around summer of 2010. So it went, I think it was August or something. It went from like level 1 difficulty to a double to level 2. And then a month later, it was 3 times as hard. And then a month after that, it was 5 times as hard. And a month after that, it was 8 times as hard. Any guess to how much harder it is today?
I can't guess. A lot.
100 trillion.
Times harder.
Times harder. The difficulty level, which is how much harder is it to get one Bitcoin than it was in, most of 2009 and the first half of 2010, 100 trillion times harder.
Wow.
And they do this algorithmically. So in other words, they will set up a math problem that your processor has to answer. In the beginning of time, it was something along the lines of like, what's the square root of 9? Now it's like, what's the square root of 9,417,742, right? So you need a much, and the genius of that was it basically protected the network because you wanted to always make sure that the hash power protecting the network is bigger than the ability of somebody to go in and brute force it.
Okay.
And as there's more money in the network, there's more incentive to brute force.
Right. And this is the beauty of that.
This is the beauty of the math behind it, yes.
Math behind it, okay.
And so, now, and the other thing is you now only get 1/16 of the reward because you used to, for difficulty level 1, you would get 50 Bitcoins distributed to somebody every 10 minutes. Mark Karpelis, who I got a chance to interview, the founder of Mt. Gox, who's mentioned a few times in the book, had gotten into Bitcoin mining before he bought the exchange. And he got in there randomly because he was a French gentleman living in in Japan, and he was working with a payment processing company, and he got a call from another French person living in South America who wanted to know, can you convert a Bitcoin into euros? And he's like, what's a Bitcoin? Found out what it was, found out where he was able to go and find somebody to buy Bitcoin for euros, and he did it. And said, oh, I'm technical. Why do I not know about this Bitcoin stuff? Read the white paper, set up a computer to mine, and within minutes got 50 Bitcoins. He said, well, I guess it can't be worth very much if it's this easy. But then he said, but somebody's willing to pay for it, so I guess I should set up more computers. He had a hosting company on the side, and he basically did the mining software on about 30, 40 machines. And within 2 months, he had 200,000 Bitcoin.
Wow.
And then the difficulty went up, and he said, oh, that's enough. And allegedly, according to him, I interviewed him last year at Korea Blockchain Week, he now has 0 because he put them all into Mt. Gox. Because he thought it was a safer place to store them, and obviously it wasn't.
Wow. And that's, again, maybe we talk about that at some point, a great case study in self-custody.
Not your keys, not your coins.
Right.
Yes.
So if we quickly go to that, people were holding their Bitcoin on this exchange that was the place of choice and probably the only way to transact, or one of the many liquid places.
It was one of the earliest places. It had about 90% for quite a while. Right. And then, Coinbase came out in 2012. Bitstamp, actually, I think was 2011.
Okay.
And so there was other early stage. And again, obviously, issues with some of them because they could get hacked. Obviously, you can get hacked if you're not careful with, there's so many, even the wallets behind the treasury movement at a giant exchange like Bybit recently got hacked for $1.5 billion.
Yeah.
Now, of course, they shouldn't have had $1.5 billion in one wallet, but they had 6 different officers or 5 or 6 different officers that had to sign off on it. But a North Korean gang was able to go and infiltrate it with something that's spoofed, and it looked like the other people were sending them the right code, and it ended up being, the one that went to the hacker.
Right. That old human way of getting through.
Yes.
Hacking.
Social engineering.
And look, I have a crypto and DeFi academy. I've taught a couple thousand students, and I always warn them that, you can hide your crypto from yourself, where you can't find your keys, or you can try to put it somewhere, and then, your cleaner will find the keys.
Yep.
And, there's
there are sort of intermediary solutions that are coming up, and I think that have been around for a while. Someone like Casa, who will basically be like, you hold the custody, but we'll have an extra key in case you have your instructions that your lawyer's going to hold one of the keys upon your death, blah blah blah. But we can't go rogue because those are always the interesting areas. Is how do you go and protect yourself against theft, against loss, against, as they call it, the $5 wrench attack, beating
right.
you over the head with a wrench, as opposed to saying, hey, it's all stored underneath a mountain in Switzerland.
Yeah, I want to get to that at the end because these things are happening all the time. Back to the 4 seasons.
Yes.
Tell me more about this kind of cycle. And again, the halving you continue to refer to refers to the fact that the block rewards go in half every 4 years. Correct. Or every 46 months. And so you just get less Bitcoin.
Every 210,000 blocks, which is supposed to be roughly 4 years, has been a little bit less. Yeah, so what happens is Satoshi had said that the price has to go up as long as the amount of new Bitcoin that is being used or sold or bought is higher than the amount of new Bitcoin distributed. So in the first in the first 4 years, it was 10 million were mined, and then it was 7,200 Bitcoin a day. We're now down to 450 a day. Now at 450 a day during this 5th cycle after the 4th halving, for the first time we've now become scarcer than gold. So gold has historically been about 1.5% to 2% new supply coming on the market, and if the price goes up, then the amount of new gold can go up because you now have more incentive to go after a gold mining operation that was not profitable at say $1,000 gold and will be profitable at say $4,000 gold.
Yeah.
And so, but that's not the case with Bitcoin. Bitcoin could go to $1 million. You're still only going to get 450 Bitcoin per day. And Michael Saylor right now is buying more than that.
Right, just him alone.
Him alone.
And
he bought 5,000 last week.
Right, and there's another 120 or 130 Bitcoin treasury companies,
correct.
Not to mention the governments, not to mention the retail.
That's correct. And so that is the new beginning of what could be a supply shock.
Okay.
And so, so basically, if you take the fair market price of Bitcoin that has been at the halving, roughly, and you look at his thesis that Bitcoin has to go up every time that there's more demand than new Bitcoin, it's been true. First halving was $12. Second halving was $670. Third halving was $8,700. And this most recent halving was $64,000. That's a pretty good investment if you just figure that at any two arcs in time with a 4-year period. I can't think of anything that's done better. And that's even getting it at 12, not getting it a penny or anything. And so, but my, again, corollary to that is it doesn't go up in a straight line. Every cycle has had fear and greed intra cycles that basically have been very consistent. So I name after the 4 seasons. So Bitcoin spring is the day of the halving. That is when the seed of the new cycle is planted. New rules. And so those new rules are, hey, miners, you were making 20% profit. Now you're 30% loss. What are you going to do? Many of them turn it off and go and use that as an opportunity to go and buy new machines, install them without having to worry about the Bitcoin they're losing out on because they aren't. And then they perhaps relocate to a place with, better tax incentives. They go to renewables that will be lower cost. If they have free electricity, like they're stealing it, they don't turn it off. So there's always somebody mining during this period. But as the amount of miners drops, that also lowers the difficulty. But it only lowered about 10% this time, which is, I think, the lowest ever, before it started going back up. And now it's all-time highs again. And so the counterbalancing effect, so that Bitcoin spring is not a period that goes down, it's flat. And the reason it's flat is as the price dips from selling of miners, there's somebody to scoop it up because they see the history and they say, oh, if it was 60,000, on the day of the halving, 64,000, and it drops down into the 50s, I'm going to buy. And it goes right up. But then if it goes up higher, you then have the miners selling. And it's literally 6 months after the halving, which was a rough it was 63,900. 6 months after, the price was still 64,000.
Okay.
Had not gone up much higher than 70 and had not gone lower than a little blip. It actually dropped down to 49 during the yen carried crisis that they had when people were just selling everything. And Germany also was selling a lot of their Bitcoin at like ridiculously low prices that if they just waited 6 months, they would have been double. And what's crazy is they're selling it for fiat currency. I mean, I think it was Michael Saylor that said the first government that prints fiat to buy Bitcoin wins. And so far, nobody's really done that.
Germany did the opposite.
They did the opposite.
Okay.
And they just did stuff that they could print anyway and got for their 50,000, Bitcoin that they had seized. The U.S. government has about 200,000, I believe. And they said they're never going to sell them, or at least not until it's sufficient enough to pay off the debt.
Right.
And of course, who knows, the next administration could do something else.
Okay. So we've got this 6 months afterwards. Spring is when you plant the seeds, when the halving starts.
So what happens is it eventually breaks into Bitcoin summer the day that you pass the prior cycle's high. And again, the scarcity eventually, gets to the point that it does that. It usually does that earlier than people think. It's the shortest season so far.
Okay.
The first Bitcoin spring only took 4 months to get to summer to pass the prior high from the pre-halving cycle, which was $30. Went from a tenth of a penny all the way up to $30 and then down to $1, and then crept up to $12 at the halving. So you'd think it would take a lot longer to triple in price almost, but it didn't. It was only 4 months, it hit $30. As soon as it hit $30, there was FOMO, and all of a sudden it's like, oh, all the headlines, Bitcoin all-time high, how could this have happened again? And what happens is that's when you go off like a rocket ship. Every single time that you hit the prior cycle's all-time high, it keeps going up. So when it hit $30, it was $250 within a few weeks. And then it was a double bubble year. It ended up going soft in the summer and then ended up over $1,200, 100x from the halving. And so that cycle, or that part of the cycle, Bitcoin summer, has been 9 to 11 months. No shorter than 9, no more than 11. And like spring, it's been creeping up a little bit. The only one that's been sort of, kind of falling back a little bit is the longest season, which is winter. Winter's from capitulation to the next halving. And that's been around 18 months. So you've got about, 6 months on average. This time it was 7 for spring. And then summer has been 9 to 11 months. I could see it being up to 12 months this time. So in other words, from the day of beating the prior all-time high, which is 73,850, which was not the bubble high of 21. It was the blip that you had a month before the halving that was 73,850 because of the ETFs. And it came down afterwards, so you can see that was not the beginning of summer. Okay. It came down to the mean. That was just a blip. And that was, people got confused by it. They said, oh, the cycles are broken. We had an all-time high before the halving. No, you can't have an all-time high of this cycle before the halving. That's last cycle. that became the new standard for what the high was last cycle. And sure enough, it didn't go parabolic when you beat 68,000. It went parabolic when you beat 73.8.
Okay.
And that was on election day. And so that within 3 weeks was 100,000. So we've been 4 for 4 now. Of the day that you hit the all-time high for the prior cycle, it goes off like a rocket ship. And so far it's been 9 to 11 months. So we should be looking at the bubble popping sometime in like October, November of this year.
And that's fall, which is what we're in.
We are in summer right now.
Oh, we're in summer right now.
We're in summer because, again, we hit the all-time high in November.
Right.
And we're still going up. And we're not a year after yet. So we are still in summer. Summer is when you get the blow off top. That's when the bubble pops, and that's the first day of fall.
Okay.
Not winter, but fall. Then that's when Bitcoin falls.
Okay, gotcha. All right, so we're still in summer.
Still in summer, but maybe halfway through.
But there's
a
not
little more.
And summer could last 11 months, maybe a little longer.
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Yeah, I don't see it lasting much past Thanksgiving.
Wow.
And
not much time left. It's July now.
Not much time left. Well, I think we're going to be, we certainly did not have a double bubble. I thought we were poised to have a double bubble, but the macro news of the tariffs and all the, chaos that, a lot of the reaction to some of Trump's policies had on the global markets, which they've recovered, right? I mean, the stock market crashed. It was like, oh my God, Trump is going to stop, bring us back to the 1800 stock market prices. And now we're at an all-time high again, right?
Yeah.
So a lot of thunder and lightning and noise around 400% tariffs and things like that. And now, it seems like it's going to be something more reasonable. They negotiated 10% with the UK. They, in the process of negotiating some other things. And, he's definitely a deal maker, right? And so far he's been true to his word to sort of do that. And the World War III with Israel and Iran seems to have been just a 12-day war, unless something else happens. And so neutral macro, we should be at about a 193, 3x the halving, because again, we had 100x and then 30x, should have been 10x, but we had bad macro in the third cycle, after the third halving. And I think with neutral macro, we'll be about 3x, which puts us about 193. And that would be, again, about 11, 12 months after. So I think because we did not have a double bubble like we did in both 2013 and in 2021, that we're going to look more like 2017. 2017, it was sort of a slow rise until mid-July, right where we are now. We're not even at mid-July yet. But July 15th so the start of the year in 2017, we were still trying to get back over $1,000, which we hadn't been since 2013. So it was 4 years since we were over $1,000. And it was like, oh, we're ever going to see $1,000 again. And everybody was hoping that it would hit by the end of 16. Did not. It was 900 and change. But in the first couple of weeks of 2017, we had $1,000. By the time that we got to middle of July, we were still only not even double. We were at like about 1,980, I think it was. 6 months later, we're at 19,800. So we did a 10x between July and December.
Okay.
Now, I'm not saying we're going to do a 10x between there, because we didn't do a 10x. We didn't do a 2x between the start of the year and now. But if you just figure that most of the action should be in the last half of the year, I mean, all we need to do to hit 200,000 is to do 10% gains for July, August, and September, and then 20% gains for October and November will be over 200.
Okay. All right. That's strong price appreciation.
Yes.
Thanksgiving is about 5 months and change away.
It's the end of November.
Right, in November. So that's like 4 and change. It's July 7th now.
Yes.
All right. So that's about 4.5 months away. Previously, it was 193, but that would include the double bubble since we didn't get
No. Did not include the double bubble.
Right. Okay.
Double bubble is just about the natural appreciation of having FOMO happen twice and then get tempered down during the summer when typically prices are a little softer.
Okay.
And historically, the two most bullish months have always been October and November, particularly during the years after the halving. So what's interesting is that every halving so far, the high has been within a very narrow range of dates. The first all-time high after the first halving was December 4th, the year after the halving. 4 years later, the high was December 17th, the year after the halving. 4 years later, it was November 10th, the year after the halving. That's only a 37-day spread out of 1,300 and something days in a 4-year cycle.
And it's going to happen again this year, you believe?
I believe so. I mean, we might be a little bit earlier. We'll probably expand the 37 days. It'll probably be earlier than...
To continue watching the rest of the episode for free, visit our website, londonreal.tv, or click the link in the description below.
Most people will never see this opportunity. Dubai luxury transformation projects have historically delivered 40 to 90% annual returns. That is incredible. These were once reserved only for insiders with access. I spent 15 years on Wall Street and I learned this: the biggest returns always go to the people who get the call first. Now, you finally can. We've just received a brand new project with major upside potential. Allocations move fast. Click the link, apply now, and speak to my team. This is your chance to see what others never will.